In this video, I'm going to show you 6 opportunities you could have taken scalping the market on the 1 minute time frame. Welcome back. My name is John. Here we talk about ways to simplify your trading and free you from the belief that trading can't be done. If this is your first time here, hit the subscribe and bell icon so you don't miss another video. Let's get into it. I just want to show you 6 trading opportunities you could have taken over a 29-hour period off of one pair on the 15-minute time frame, entry on the 1 minute. So if we take a look here, you can see that I have areas marked off, and this is just areas where I would expect price to react and change direction. Doesn't mean that it will, but we mark it off as a potential area. And what we'll do now is we will drop down to the 1 minute, and we will go through each one and see why we could have taken these trades. Okay, so what we can see here is price came into our area that we had marked off and stalled in the area, signs of exhaustion, and then a strong bullish candle. And what we're doing then is we're targeting the highs, and you can see this one was a 3.52. Now this one here, you see that was just an hour and 35 minutes for that trade. Not bad, less than a couple of hours. And price leaves, starts to leave, comes back into the area, and again, what we see here is a pattern that we're interested in, where we see price pushing in and stalling out and an engulfing pattern. So we're targeting a low. Now you have to decide where you want to target, because some people might have decided to go for the low right here, but now the issue with that, you might not hit it, and you might have decided to take some partials along the way. We go through here. And you can see price comes back into our area and stalls out, signs of exhaustion, engulfing candle. So we target the low. And you can see that it actually didn't make it this time. So this would have been considered a loss unless you took partials, because you can see that you would have hit a 1-to-1. So that would have been your decision. But if you decided not to move your stop loss at all, this would have been a losing trade. And there's nothing wrong with that. So you have to learn to accept that. And here we go again. So price came back into the area, stalls out, engulfing pattern. We would have entered the trade targeting the low. That was a 2.02. And when we look at this, this was only a 38-minute trade. Not bad. Then you can see we have some coming up there that weren't very long. So again, comes back into the area once again, stalls out, engulfing pattern, targeting the low. Oops. 6-minute trade. Then once again, comes back into the area, stalls out, engulfing pattern. Oh, this wasn't a very strong signal there. This candle was kind of small, but you might have taken that trade. And if you did, you wouldn't have been in it for very long. So you can see again that it was only a 7-minute trade. So this is the one thing that I love about the 1-minute chart. You're in and out. You're not sitting at the charts all day. And I doubt you're rarely going to be holding on to a trade into the next day. I would usually avoid that because oftentimes what I notice is if I'm in a trade, what happens is I could be 15 pips in profit, maybe 15 pips. Let's just say we're 15 pips away from our stop loss. Maybe we have a 6-pip stop loss and it's coming near the end of the day. You're pretty sure that it's actually going to go the way that you want. But the problem here is at the end of the day, the spread opens right up. And oftentimes you can see spreads go as high as 20 pips. So you take that into consideration, and then you also have to consider that the possibility that it may gap. And if it gaps, then what's going to happen is sometimes it'll work against you. So it may gap. So maybe you're targeting the downside and your stop loss is above and it gaps up. Plus you see you see your spread of 20 pips. And so you could be looking at 20, 25 pips, something like that, you know, depending. And most people aren't going to have their stop loss that far away. So now if I was in, let's say if I was 30 pips in profit, then that would be a different situation and I may hold on to the trade, but anything less than that, I don't think I would even consider it. So once again, you can see price came down and it came in and touched into it and gave an engulfing pattern, but I like to see something else come into the area and stall out before going in the direction I want. So you see it comes back into the area and then we see an engulfing pattern right there. So now if you would have decided to take it right here, there's nothing wrong with that. You could have taken it, but it didn't work out. So hopefully you would have gotten in on the second entry and you would have been able to see how this one plays out. Now this was longer trade. And there was a couple things you could have done. You know, you could have moved this to break even, and with most of the trades you could. And so it's up to you. You have to decide if that's what you want to do, because that might not be the best strategy for you. we can see here that this one was a 5.54. If you didn't touch this, if you didn't take any profits off, so you can see this worked out fairly well. 5.54 risk to reward. And this trade, 2 hours and 5 minutes. So it wasn't bad. You could see that price almost came back. So if you would have moved your stop loss to break even, it could have come close to it, but it didn't. You could have taken some partials along the way if you wanted to, but if you just left it alone, you would have had a 5.54, which is fantastic. All for a couple of hours. Not bad. And I think that covers all the trades, but there you go. There were 6 trades. One trade wouldn't have worked out, but depending on if you would have moved your stop loss to break even and taken partials, you still would have had some profit on the table. Now, over a 29-hour period, that would have worked out to 18.85% if you're risking 1% per trade. Where else can you do this? So all you're doing is looking for areas where price may react. You never know where that's going to be. So it's easy to draw it up on a chart and show you, but so you're going to take a lot of losses, and depending how many pairs you're watching, you have to be prepared to accept several losses, because if you're just watching GBP USD and you suffer 3 losses, that's not such a big deal, maybe. But what happens if you're watching 3 or 4 pairs or 5 pairs and you run into a bunch of losses with them all? Are you going to be able to handle that? So just keep that in mind. Don't get discouraged. I would suggest that you demo trade anything that you're planning to do. And once you've been able to prove that you can do it, then take it into the live market. Don't risk funds until then. I know some people suggest or believe that you should put live funds into the market, otherwise you're not going to take it seriously. But test your system out. Make sure that you can validate it before going forward. And if you can do that, then step into the market and test it out and see how it works for you. But this happens over and over again, guys. Let me know if you took any of these trades and how your day turned out for you.